then I got to make you the, okay, can you share your, how does that work? Do I have to make you the host?
Should be okay. Yeah, you will have to make me host. Let's see. Yeah, so go under participants.
Oh, I see. I could say who can share all participants.
Nice. Okay, you got it.
Okay. There you go.
Good to see everybody.
Yeah, so like, let me just introduce this. So for everyone that's out there, so if you guys haven't met Brandon and Reid, I think some of you probably haven't yet, but he's the first guy I met from Heartland. Actually, I called up the office when we were looking to move over or do something different from when we were at FFL, and I ran. This was actually the product that got me in touch with Brandon, because I saw it out there, the Heartland National Hospital Indemnity product, and you know, everybody was talking about it that sells Medicare. So I was like, all right, well, I need that. And everywhere I went, I couldn't really find a good deal. So finally I was like, I'm just going to go to the source. And I called up there, and I guess you called me back or something, but you were the first person I ever spoke to from Heartland, and my favorite person there. I love everybody there, but Brandon, if you guys don't know Brandon, he's the nicest guy. Like, he's almost too nice. I mean, just like everything he's just the nicest person you'll ever talk to. And he's from Canada. So I guess that goes along with the niceness. Everybody from Canada is nice. But I didn't even realize that for like a year. That was funny, because he kind of hides the accent. Occasionally you'll catch the A.
Yeah.
But yeah, great guy. And he since has been, he doesn't work with us quite as much, because he's gotten a promotion to be the vice president of Heartland National. And it's basically a subsidiary of Heartland Financial Group. Same building and everything, but he does his own thing. He doesn't really work directly with us, the salespeople. So, but he still does run this product, and it's awesome. We don't sell enough of it, but it really should be incorporated into everything. I mean, and not just Medicare. Like, this is something that should be sold along with life sales too. A lot of the life insurance policies, the term policies, have basically this product as a rider. So maybe not necessarily always in those cases, but if you're selling final expense, this goes right along with the final expense. It's basically those living benefit riders that we have on term products, but you could sell it alongside of a final expense plan, and it works the exact same way. I mean, they got to be fairly healthy, but if they qualify for final expense plan, they're going to qualify for this. So anyway, we should be selling more and talking about it more. We haven't had Brandon on in a while, so I'll let you take it from there, Brandon. Thanks for all your help, man. I always appreciate everything that you do for us, and it's always good to see you and hear from you, and glad everything went well in Canada.
Thanks so much, Drew. Yeah, and I figured you liked me, because you're always sending like 3 boxes of cookies over to the office every year around Christmas time. But no, I appreciate everything you said and all the kind words. It has been a pleasure working with everyone, and I'm loving the new role on the insurance carrier side of things. Definitely a little bit different than having to learn and be knowledgeable about all sorts of different companies. Now I'm working with one company, really one product, maybe 2 if you really think about it. But this hospital indemnity that we're going to talk about for the majority of today's call is it's my life really now, and I love the product. I'm seeing a huge uptake in sales in the under 65 market as well. So Drew was just talking about how this policy can be sold to those on life insurance and the people you're helping with their life insurance. The nice thing about this too is it doesn't matter if they have other health coverage. If they have no health coverage, if they have an ACA plan, COBRA, an employer group health plan, Medicare, right? Any type of Medicare plan, they can pick up this plan. So long as they qualify through a series of medical questions, they can take out this program, and it doesn't cost an arm and a leg to do so. And it's some pretty comprehensive coverage, whether it be in the hospital or on the diagnosis of cancer. It puts your clients in a much better spot. Living benefits wise, even you could think of it as a death benefit for some people who pass away, later on in life for their loved ones. Somebody ends up in the hospital for 30 days, and after being diagnosed with cancer and spending some time in, who knows, skilled nursing, having some outpatient surgeries, they could end up with $10, $15, $20, $30,000 in benefit from having a policy like this in force during that time. So it's a wonderful way to to package with everything else you're doing. It was designed specifically to fit around Medicare Advantage, and you'll see a lot of the product design fits like a glove around those Medicare Advantage benefits, but it doesn't limit you to just helping your Medicare Advantage clients with it. So without further ado, we'll go ahead and get started. We'll dive into the agenda. We'll talk a little bit about our product offerings as a carrier. Currently, Heartland National has 2 products on the market, but I do have some exciting news to share with you pretty soon here, and there'll be a big announcement coming out over the next several weeks. We'll talk a little bit about how to cross-sell hospital indemnity, something I'm very passionate about and I've been doing for a few years. This year is my best year sales-wise, and I've packaged about 20, tonight makes 23 of these this year. And when you really break down commission-wise what this does for you, it could take you to another $20,000, $30,000 a year in income. And the nice thing is the renewals are not that bad either on a product like this. We're going to do a quick
these are typically sold with clients that you're selling something else, right? So that's just tacking on, and like it's not like you're doing much extra work.
You're taking that renewal from $24 from one policy in the home to now, maybe $40. Then maybe you've got a small renewal coming in off the life insurance too. It's I love it. I love stacking plans, and this is the plan that I stack the most. I could see some of us probably who are more familiar with life insurance stopping there, right? But don't stop there. If you're not selling this hospital indemnity plan, somebody else is. And honestly, if somebody else is selling them this policy, they're probably going to get their Medicare Advantage down the road too, because they're the ones who's really breaking down their coverage and helping them get a check every time they go to the hospital or get diagnosed with cancer or end up needing a surgery. They're helping these people make money and get those copays paid for on their health plan.
Think about it too. When I see these plans, Brandon, like even without this plan, I've always tried to understand the side. Some of these, it just seems to me like ignorant, old, not necessarily old, but they've been in the business a long time. Med sup only people that just say that the value for med sup is so much better. And I sit there. I was talking to one of I think Jason. We were talking about it. I'm like, I literally can't understand it, because if you take an MAPD plan with a max out of pocket of $7,000, $7,500, that's like the most that you'll see.
Yeah.
And you've got a healthy person, and more than likely, statistically, they're probably not going to get very sick for 10 years. So for 10 years, they're not paying that premium that they would be paying, say $200 a month extra when you factor in the med sup, dental, and all, everything that goes with it. That's roughly $3,000 a year times 10, that's $30,000. And even if you did get a major sickness at that point, and if you have a hospital indemnity plan, then that completely wipes out. Like, I don't understand that argument.
Right. You're not paying for that stuff all the way up to hitting that max. Right?
Yeah.
Heartland National is.
Right. So then it takes that.
Yeah.
But even if you, without that, like $7,500, even if you've got 3 years where you're hitting the max, that's what it would take to get to where you're spending more money than you would have on the supplement.
Right.
I don't get it. And then when you tack on a product like this, that eliminates that max out of pocket. Because anytime if you hit the max out of pocket, you've gone to the hospital. Would you agree with that?
It's been a bad year. Yeah, something serious happened.
I mean, you didn't just go to the doctor 700 times.
You spend a few days probably in the hospital if you're hitting your maximum out of pocket.
Yeah. So, and if you got this, it could give you an extra $500 or whatever to $5,000.
Yeah.
I don't want to take away from your time, but again, if we're doing Med Advantage, it really strengthens that argument against the med sup only, those gung ho people. It's like, well, let me show you something that even, there are some gaps in the Med Advantage, but we have something that actually fills that for much cheaper than a supplemental plan.
I love it. So yeah, you actually bring me into a big part of my presentation is bridging the gap between that really expensive, comprehensive, but expensive Medicare supplement option with a standalone drug plan, standalone dental, vision, hearing, cancer, a very expensive option, and your $0 premium Medicare Advantage plan. We're able to bridge the gap between those two options and get you covered for a lot of those services that otherwise you wouldn't be on a $0 premium plan. And guess what? For a fraction of the price of a Plan G, with all those extra bells and whistles like drug coverage and extra benefits. So there's a really neat slide we're about to put on the screen here, but you guys can, I'll send you a copy of the presentation. You guys can print out this page. I use this in my T65 educational events. I use this in my one-on-one meetings. You can see it's a little bit wrinkly because it's the one I used tonight, but you're about to see this on the next slide. I encourage everybody to print this out and bring it to your appointments. Even if it's not T65, print that out. So we're going to talk a little bit about product availability, and then we're going to dive into this really cool one-pager that really helps you cross-sell hospital indemnity and put your clients in a better position than they would be if they didn't have it. And
I need to get that on my, I've got a brochure that I use for Medicare in general, but I need to somehow.
This is all I use. I don't have anything else in my bag other than this. The summary of benefits of whatever plan I'm about to be selling. That's it. Couple scope of appointments in my folder, but that's it. Make it pretty simple. And really, to Drew's point, you just shared with everybody, Drew, not a lot of people can afford this middle option anymore with the Part B premiums increasing, $170.10 this year, every month for most people, depending on their income. A standalone prescription drug plan with higher drug costs associated with them. Dental, vision, and hearing all sold separately. That all adds up, right? So a MedSup premium, a Part B premium, a drug plan premium, dental, vision, hearing. Not many people go that route anymore. And we're seeing a huge shift in the market leaning towards Medicare Advantage. And there's no better time than now to be positioning that hospital indemnity. But not to discount Medicare supplements. Heartland National, we do have a Medicare supplement available in 10 states. We did just take some increases, some rate increases, so you will notice that when running quotes on CSG. CSG is a free quoting tool that everybody gets access to once you're contracted with Heartland National. And the quoting tool is actually provided through Heartland Financial Group and One Life. That quoting tool is accessible through Reg and AI. So if you haven't been in there, you can quote MedSups all you want at no cost, and you'll see every plan on the market to help make that job a little bit easier. Keep the MedSups in your pocket. Obviously, there are some clients you'll run into that are just like those agents that Drew was talking about, stubborn and don't want to hear anything other than Plan G, right? My brother had a Plan G, or my father had a Plan G, and I want a Plan G because he never had any bills other than the first $200 and some odd a year, right? That was it. Okay.
Yeah, and for those people, fine. I mean, we do MedSups too. I'm not ever knocking that. I'm not ever saying that one is necessarily better than the other. For just to make a blanket statement like that is just pure ignorance. But everybody's different
options, right?
Yeah, in certain cases, I think the supplement is what you should advise people to do. If they have a lot of health issues, they probably should do a supplement when they turn 65.
But if kidney issues and you're going to be on dialysis, paying 20% on a Medicare Advantage plan and hitting your max out of pocket every year, go with the supplement. If you think you might be undergoing chemo for the next couple of years, let's start you off on a supplement, right?
There you go. Yeah, I mean, but if you haven't had cancer yet, then maybe it makes sense to do a Advantage and get a cancer rider, get a cancer, this plan with cancer rider. So we'll break down MedSups a little bit just for everybody. Again, that is available in 10 states at the moment, and we're working on getting that expanded over the next year into an additional 15 to 20 states to where that footprint will be much wider, kind of mimicking our hospital indemnity footprint, which you can see is in 36 states. At the household. I'll add to that too, Brandon. If you run across somebody that already has a supplement or a Advantage, the odds of convincing them to change it are not, unless they just don't like it, you're probably not going to have them change it. So we want to go the route of keeping them in that. If they're in an Advantage plan, just find them a better plan. If they're in a supplemental plan, find them a better plan, find them something that'll save them more money, or maybe go from a G to an N. Or an F to a G, whatever, share with them that, but stay in that same ballpark
Yeah, and there'll be times where you move into a different lane, and the reason for it, sometimes you'll notice, people have been stuck on a plan that's taken lots of rate increases over time.
Yeah.
I've got several in some other markets other than Missouri, where they've been on a plan for now 10 plus years. Their health has gotten really bad to where you cannot underwrite them onto a plan to save them money. You can't move them to a cheaper plan G, or you can't move them down to a plan N to save them money because they don't qualify through underwriting. So in these scenarios where somebody's now paying $300-400 a month, to Drew's point, $300-400 a month for a Medicare supplement, why would that person be spending $5,000 a year in premiums just on their supplement alone, not to mention their drug costs and dental, when they can be on a Medicare Advantage plan at no cost with a maximum out of pocket of $3,400 or right $4,000, $5,000, $7,000, 10 at the max.
Yeah, and those are perfect scenarios. I mean,
and then the healthy ones
I
too,
don't
right?
know.
The healthy ones too. Maybe they are paying $200 a month as a healthy individual who could be underwritten, like in a state like Florida or Missouri, where med subs cost a ton. Turning 65, paying $160 for a 65-year-old female here. That's the number one rate. I mean, when you start adding in all their medication costs and everything like that too, which are typically higher on standalone drug plans,
much higher.
The costs don't make sense. And typically, if you can break it down for them and show them, here's what it's going to cost in column B, your Medicare supplement with your standalone drug plan. Here's what it's going to cost in column C with your Medicare Advantage, just as far as premiums go. And here's the most you'll ever spend on copays. And by the way, if you put a little $30-40 hospital indemnity plan together, you're not going to have to worry about a majority of those copays. They're leaning towards column C, Part C, Medicare Advantage with an indemnity. So we'll break this down.
Let me. I don't mean to keep interrupting you because this is your thing, but I also another part where we see that where this product should be incorporated. Sometimes you run into people that can't. They're in the best plan. I mean, because of their meds, their doctors, whatever the network. We can't switch their plan. It doesn't make any sense. But they don't have anything to fill the gap, and they do have a max out of pocket and no indemnity plan. So at least in those types of homes, you can walk out with a sale, even if you can't move their plan.
Exactly.
And we sold year round. So some of these that we're running into now that we have to wait till AEP, maybe go ahead and get them on an indemnity. So you're getting them set up with that route before.
Yeah. And when you're working T65 too, and somebody's on an employer group health plan, right, with a huge deductible, don't forget this hospital indemnity plan is not limited to just people on Medicare. That person that you're waiting 3, 6, 9 months for to help with their Medicare, to help put them on a $0 premium Medicare Advantage plan, that person still has gaps in their coverage. They've actually probably got worse gaps than they will on their Medicare Advantage plan.
That's a great point for Jason, if you're listening, that he's running these T65 seminars, and a lot of the people aren't turning 65 till February.
Yes.
But, yeah.
Write the indemnity now. I've written about 7 in the last few weeks, and I haven't written their Medicare plans yet, whether it's a month away or if it's happening in October or November.
Yeah, that's a great point, because they have the plan that they're on is very similar to Med Advantage.
Well, then you get in front of them once too, right? Yeah. You're in front of them. You've got some trust now. They're paying you a premium. How easy is it going to be to enroll them in a $0 premium plan now? It's like going from selling them a life insurance policy for $50 a month to enrolling in something that's going to give them all these great benefits that they can use for nothing at no cost, premium wise. I love it. Now, this is how I want the call to go. It's good. It's like a podcast almost. We're just having a discussion about it. And I think you learn more talking like this. So product wise, that's great. Product availability. We do have a $300 bonus that we pay on our Medicare supplement on underwritten business, not open enrollment, not guaranteed issue, underwritten. So that's somebody like we just talked about, somebody moving from a $300 plan G to maybe a $220 plan G, or $175 to $150, helping lower their premiums. And you're able to do that through answering a series of medical questions through underwriting life insurance. And we pay that. The product is also reinsured by Mutual of Omaha. So there's a big name backing our company. on the Medicare supplement side. I don't know why, I guess I'm using a copy of this presentation that I made before we extended our bonus, but this bonus has been extended through the rest of the year as well. So reinsured and underwritten by mutual. But most of us are in states where all we have right now is a hospital indemnity. So we're going to spend the majority of today's call on hospital indemnity. But before we dive into how we sell that and how we position it in the home, let's talk a little bit about med subs, right? And when I say a little bit, column one, we have to go over it with them. Although it's becoming simply unaffordable for a lot of people these days, it's a very comprehensive option, and you don't want to not talk about it, because if you don't talk about this with somebody and you limit them on their choices at 65 when there's no medical questions being asked, you're putting them in a spot down the road 2 years, 3 years, 10 years from now, when they do, get diagnosed with cancer, or when they do end up needing kidney dialysis, right? When they do end up in a skilled nursing facility for 80 days and they're paying $188 a day, right? Or $194.50 on original Medicare. These are things that can be covered on a Medicare supplement by paying a premium each month. So we have to present it. That has to be a big part of your presentation before you get into the other stuff when you're talking to T65s. So go over the fact that all of these things on the screen, other than that Part B deductible, are covered on a Plan G. Break down the Plan N if they do want to hear more about these Medicare supplement options. If you're in a state like North Carolina or Wyoming, I have some clients up that way. These Plan Gs cost $90, $100 a month for these folks. Even Georgia, I've got some clients out there with mutual.
Oh yeah,
$89, $90 a month for these plans.
Well, they go up every year, but yeah, they even. I just had a client who's 78, and she's got a Plan F, and she's paying $230. That's high, but it's with what the amount of coverage for a Plan F, she's got all sorts of health issues. So I couldn't. What I did, she has AARP, and they allow you to switch to an N without doing whatever underwriting. So that's like all we could do for her, but she so she was grateful because it basically cut $100 a month off of, and they don't pay me a commission for it, but that's annoying. But we're gonna get a new. I mean, she loves me, so she's got a lot of money. So
no, exactly. Now you get the annuity, you help with the life. You build a trust in a client, and you're their agent for life. So well done, and that's what it's all about, is doing right by your client. I've done a couple GI changes this year and not got paid on them, but saving people hundreds of dollars a month, right? So it matters, and it's important. So educate them on the med sup, then move over to column C. Break down those numbers though. And this is what I like to do on my little sheet here, right? Every column has a section in green called your Part B medical, right? What does that cost you? Okay, if you make less than $91,000 a year, it's either 91 or 89. But if you make less than that, you pay $170.10 a month. Put that in column 1 in the green box, put that in column 2 in the green box, and put that in column 3 in the green box. That doesn't go anywhere unless you're cost share protected by the state on Medicaid on certain levels of the Medicare Savings Program.
What is that going up to next year?
Oh, it'll probably be either close to or over $200 next year with the rate.
They haven't announced it yet, though?
No, I don't know what it is. They might have, but I don't know what it is yet for next year. But what we've seen, this year being the biggest increase in history, hopefully it's a little more moderate than last year's increase.
I don't know. Not if they take inflation into the account, it's going to be more.
So that brings up a good point, and that's a really easy way to move on to column 3. And it's talking about inflation. It's talking about that Part B premium going up every year. It's talking about how the fact that you have to pay for a standalone drug plan. You have to pay higher costs for your medications on these Part D plans than you would on a $0 premium Medicare Advantage plan. The drug costs are not the same. You usually end up paying more with standalone drug plans. And you don't have those $0 tier 1 and 2 options in the mail order like you do on Medicare Advantage plans. You also have a deductible on tier 3, 4, and 5 medications with standalone Part D, right? And then you enter into the donut hole for some people, and this column ends up costing some people $7,000-8,000 a year when you break down all the drug costs, the Part B deductible on your supplement that you're still paying, and their premiums. Then you get into the fact that, okay, right here, this all costs about $7,000 for that individual. How about over here? Your drug costs are going to be maybe $700 next year. You're going to have copays in the hospital, but Mr. and Mrs. Jones, if you'd like to bridge the gap between this $0 premium plan with a bunch of holes in it and that really comprehensive option that you said just was simply unaffordable for you, let's go ahead and do that. Here's what it'll cost, right? You take out your summary of benefits that you're going to go over with them, whether it's Humana, Aetna, United, Blue Cross, WellCare, and you get into it. Mr. and Mrs. Jones, as I educate you on how your plan's going to work, you're going to see a series of costs, right? Of benefits and costs that you're subject to. You have two plans, right? That you're helping them decide between. You give them one, let's just say AARP, plan 2, PPO. You keep the other. Okay, Mrs. Jones, let's just pretend you have that plan and I have this one. And you tell me at the end of this little demonstration who you would rather be, me or you. Okay, I've got this plan. I got a $0 monthly premium. What's yours? Oh, $0? Great. Well, that's good. How about your maximum out of pocket? Mine is $3,425 in network, $3,425 out of network. That's right here in purple. Oh, yours is $3,900 in and $10,000 out of network? Which plan do you like better so far? Right? Mine. She wants to be me at this point.
That's a good, I love that Casey Blue.
Yeah, I'm just talking about this because this is exactly what I did an hour ago. I just positioned it like this. So I'm just talking about a recent experience. Next up, your inpatient hospital stay. What's yours? $300? Okay, mine's $325, but that's not going to be a big deal. I'll tell you why in just a few. We've got the ability to eliminate that essentially to where you're actually making money in the hospital. And it's not going to cost you much more than about $30, $35 a month to do that. For the lady tonight, it was $27 to eliminate her hospital copay and her emergency room copay. Next up, skilled nursing, right? Yours is $188 a day, days 21 through 100. Mine is 2, right? Not a big deal there. And oh, by the way, just tell me what you want to cover. I'm going to tell you what you can cover for a little bit of a premium. Just tell me what you want to eliminate. Do you want to pay that hospital copay there? No, I don't want to pay that. I can't afford $2,000 after 5 days in the hospital. No way. Okay, don't worry about it. Give me just a moment. I'll get a quote run for you and show you exactly how much it would cost to eliminate that. How about skilled nursing? Do you want to be stuck with do you want to hit your max out of pocket if you have to go to skilled nursing for 50 days, 60 days? No. You want to be paying that $188 copay days 21 through 100? No. The emergency room will eliminate that to where instead of you paying a $90 or $120 copay for an ER visit, you're going to get a check for $150 4 times a year, every time you go to the emergency room for no additional premium. That's built into the hospital coverage. And then you keep going through the list. How does a $0 copay sound to see your PCP? Who, by the way, is in network. I already checked it for you. Same thing with your specialist, not 0, but $25, right? Moving on through, just be aware you are going to be responsible for a $100 copay for an MRI, right? At your physician's office. If you have to go somewhere else, outpatient, for that MRI, you're going to pay $250. Try to stay in with that physician's office or freestanding clinic to get that done. Moving on, and I'm just walking through the list. This is all you do. Look right here. This is all you do. You come down the list on the summary of benefits and you fill in the gaps, right? Instead of you paying $340 a day, days 1 through 5, I'm going to set you up with a $350 hospital benefit for $27. You're not going to have to worry about that anymore. The reason I'm doing this, Mrs. Jones, is because you remember that option here that was going to cost you $7,000 a year? You weren't going to have to pay anytime you ended up in the hospital for that. We're not going to be subject to any of those costs day one in the hospital. I want to bridge the gap between this crappy $0 premium plan and that really great plan that we talked about, but for a fraction of the price. And I wouldn't call it a crappy plan, but this $0 premium plan with a bunch of holes in it and exposures. Because you know they're not going with that $7,000 option in the middle, most people, or whether it be $3,000 or $4,000. And just keep plugging it in, okay? Plug and play. And now, Mr. and Mrs. Jones, I'm going to take you into the quoting tool. I do have one more thing to add. mostly all of these plans, except for I know one with Humana right now, a PPO, mostly all of these Medicare Advantage plans have a 20% coinsurance on chemotherapy. Do you want to know one of the most common ways that people hit their maximum out of pockets on these plans? It's due to the diagnosis of cancer, right? That's how this individual would hit this $4,500 MOOP. It would end up being diagnosed with cancer. They'd need chemo, where they would pay a 20% coinsurance. On that other Humana plan I was talking about, it's only 10%. In South Carolina and Missouri, I know it's available. But you would pay 20% of the cost, which would very easily take you up to this number here. Plus, you'd probably be in the hospital for quite a while, which would also add up to you hitting that number. So we're going to break that down a little. You tell me what's most important to you out of all of these costs here. And tonight, the lady chose hospital, ER, ambulance, skilled nursing at $200 a day, and cancer, $8,000 in cancer. And you position it, and that cost her $68, everybody. $68 and some odd cents. And she is now in a way better position than she would have been if she didn't spend that extra $68 a month. $68 a month. Adding riders that cost, $15 for some skilled nursing, maybe $18 for, some cancer insurance. Just bringing you a little bit closer to that middle option than you were before, without having this hospital indemnity plan on your $0 plan. And so what does all this cost? And you just break it down for them. This plan costs $0. Okay, you get all of these benefits. This is what your medications are going to cost. This hospital indemnity plan in the orange box, right? On our little grid here, this, you point to it, and then you write in the premium there. And excuse me, let me get my dog. You write in the premium.
What kind of dog you got?
I just got a new one on Valentine's Day back in February. He's only like 8 months old. But
what
my
is
wife brought him up here because he was barking, I guess. He's a golden doodle.
Oh, he looks like he's brown.
I know he's got that Merle gene, which gives him like a really neat blue chip in his eye.
Yeah. Well,
And,
we've got a sheepadoodle with that's gray like that.
That's similar, right? So yeah, he's a good dog. But isn't this fun though, positioning like a hospital indemnity plan with a $0 premium plan? Because it doesn't cost them a lot and the benefits are really powerful, right? There's a lot of value in what we're talking about here. I'm protecting you on the diagnosis of cancer, which God forbid that hopefully that never happens. But if it does happen, you're in a better position for it by paying this little premium every month, half or a third of what you would be paying for this middle option here, the Medicare supplement. But we're protecting you from some of those bigger exposures and the more common things that people worry about, right? If you had a $0 plan, what do you want to eliminate on that $0 plan? It's the risk for cancer. Maybe sell them a heart attack and stroke policy with Aetna or something like that. It's the skilled nursing, that big $188 copay in skilled nursing, outpatient surgeries, you can eliminate it all. And I'm just going to skip ahead a little bit. We're going to go over this option here and just show you how you can kind of position this. So instead of being responsible for a $1,700 copay days 1 through 5 and a $225 ambulance copay, $90 in the ER, and being left with this $2,000 bill, I'm going to position you to where you're receiving a $2,100 check to pay for all of those services, to pay those copays. And all you, Mr. and Mrs. Jones, are going to be paying is $31.53 a month for those basic benefits, right? But you can get creative with it and put some cancer insurance on there and some skilled nursing and put them in a better spot for 10, 15 years from now when something happens so that they're not breaking their bank.
Hey, here's another thing to consider. I'm sure you're going to get to it because I've seen you do it before, but it's not a question of if, but when they go to the hospital.
Yeah.
I mean, when you're 65 or 75 or however you're selling this to somebody, they're going to go to the hospital. I mean, even if it's the final time before that they're alive, they're going to the hospital. I mean, unless they have a freak car accident, and I don't know if
you're going at some point, right?
Yeah, I mean, it's not if, but when, like, this policy is going to pay. It's going to happen. So
But you're
if
gonna
somebody's
find
like,
that
well,
people are selling themselves too, because they're telling themselves that they're saying, "Oh, I'm very healthy right now. I'm not needing any of this stuff done." But then they're also thinking, and they're saying it out loud. They're saying, "But that might change, right?" And
well,
then
they
you say,
know it.
"Yes, it's
I mean,
because it's just like car insurance." And the
if
health
they
insurance you've
ignore
been
that,
paying
then
for
that's
60
just,
years.
then
Yeah.
I mean, they can't be that delusional to think that they're at 65. Yeah, great. You're healthy. You got lucky. You took care of yourself. You'd probably be good for another 10, maybe even 15 years without ever really needing major health care.
Yeah.
But when you get it, when you get into think of one person, and I'll do this with my clients. I'm like, think of anybody that you know that's over 80, parents, friends, whatever, anybody in their 80s that has never been to a hospital. Do you know of any? And I make them think about it. If they start naming people off, I'm like, okay, well, then when did that person finally go to the hospital? Because they didn't make it to 90 without going to the hospital. But I mean, they usually know it's inevitable. And great, hey, if you make it to 85 without going on, but point is, it's gonna happen, and you're going to get your money out of this. And if you ever get the objection of like, well, I could take that $60 and just put it in a savings account, be like, well, sure, but are you gonna actually do that? Because are you doing that now? Like, if you're anything, and I try to just be like, if you're anything like me, I need plans like this to protect myself from myself, because I'm not going to save this money for that event. I need it to have it in there when it does happen, because it's not going to be there otherwise. I'm going to spend it. I mean, I have all sorts of ways to trick myself, but I'm helping that my clients understand that too. I'm like, look, if you are that diligent and you knew that $60 a month that you could put away into savings, and you knew with 100% certainty you weren't going to go to the hospital for 20 years, okay, I tell you to do that. But that's so crazy. There's no way that you could ever.
Yeah, delusional is the word for it. You're right. Yeah.
I mean, like, and I try to side with them, because I'm like, yeah, and I do this with life insurance too. I'm like, if you know that you're going to live for 25 more years, 100% certainty, and you also have the discipline of saving $100 a month, I'd be the first one to tell you, go put that in savings. Mm-hmm. You're totally different than me, because I don't have that kind of discipline, and also don't know that you're going to live for 25 more years. I mean, that nobody knows that. So like, you can't make that. And that's the thing, is like, if you end up losing in this scenario financially, that's not the worst thing in the world. Like, you still, it's going to pay eventually. If you break even, I mean, that means you lived a long time and you had a healthy life. Like, that's a really good thing.
Yeah.
So wouldn't you want that peace of mind while you're doing that? Like, just to not have to worry about it? Like, what if one day, like, you just have a scare and it's not really a heart attack, but then you start thinking about how you don't have any money to help. If you did go to the hospital, it might turn into a heart attack.
And the lady tonight, I brought it up. So the plan I had quoted for was $52 a month, right? Without the skilled nursing. Skilled nursing, though, as we were going through the summary of benefits, sounded like a really good idea, because that's a big exposure, $188 a day, right? Days 21 through 100. That's thousands of dollars, and a pretty easy way to hit your max out of pocket. Does everybody end up in skilled nursing? No. But for those who do, it costs a fortune, right? It costs a lot. And sometimes your Medicare Advantage plan decides they're not going to cover that skilled nursing visit. So a client I talked to tonight, they not the one that I wrote, but somebody on the phone, they said their husband their father had to go back to original Medicare because their Part C plan was not going to cover them in skilled nursing. Went back to original Medicare, they still ended up with a $4,500 bill. He just told me about this scenario.
I've actually heard this a lot.
Yeah, it's happening a lot. And guess what? This hospital indemnity plan works with anything. There's no coordination of benefits. So if you have a $200 a month benefit or $200 a day skilled nursing benefit on this plan, if something like that happens, which is I'm starting to hear about it a lot, like you said, you're going to start getting $200 a day, whether Medicare's covering it or not. As long as we can see you were in there, we're going to get you paid your benefit. So unfortunately, that guy's a little too late. He just got diagnosed with lung cancer and all sorts of stuff was happening. He just spent all that.
You can add that on this plan?
Yeah, look at this.
That's awesome. I didn't realize that.
Yeah, we'll get into that. It's right here. Look at this. The bottom,
okay, yeah.
The bottom right or there. So What time is it even? I don't know. I'm having fun though.
8:45 your time. So
You
you
guys,
just keep going. I mean, if anyone on the call, if you got questions, go ahead and ask them just so.
and I haven't said hi to everybody. So hi, Ashley. Hi, Brad. Hi, Justin. Jason. It's good to see everybody. And Reid, we got to say hi at the beginning, but I'm so happy that you're all on here.
Good to see you too, Brandon.
Yeah. No, it's been a while for sure.
It has.
I know. I see you guys still on Facebook, so I know you're hustling and working hard. So congrats on the solid year, and I'm excited for this upcoming AEP. And I'm happy you guys are listening today, because this plan, I'm telling you, it makes a difference for your client and you, especially during AEP when you're waiting for those commissions to come in January. And the agent who's writing hospital indemnity is getting paid on issuance of all these policies. Even if they're writing it October 15th, they're probably setting it up for January 1, right? To coincide with their Medicare Advantage plan that they wrote. You're still getting paid those commissions in October.
Yeah, actually, I was just thinking that dedicated thing that y'all are doing, this would be a good,
Yeah.
Right?
because she's got this opportunity with one of their value-based care in Nashville. It's going to be awesome, but I think she's writing them for all effective of October 1. So you're going to get prorated like hardly anything because it's the end of the year. But this would hedge that if as long as it's, I don't see why they would care. But if you're like, look, there are some holes in this plan and I've got something that can help me fill it. Is that so? How do you position it in that? Like, let's say they already have a Med Advantage plan.
Yeah. No, it's just as easy, because they've probably experienced some things like copays, right? Even if they are that healthy person who hasn't yet, they're getting older, right? They're now 70, they're now 80 years old, right? It's going to cost more at that age. But guess what? If you lock it in now, Mr. and Mrs. Jones, you're going to pay the 65-year-old rate for the lifetime of the policy. That way, when you're 70 and you're finding out you really need this, kind of like when you got in that car accident and you realized, oh, shoot, probably should have been paying for car insurance. You buy insurance based on when you're going to need it the most, right? That's a good way that agents sell MedSup. You buy insurance based on when you're going to need it the most. So do you want to be paying that $1,700 copay for 5 days in the hospital? Or do you want to get a check for paying a measly $25 premium for every month, right? To pay those copays. I'm sorry, guys. The
other part is like that comes up in life sales too, is like you can't buy insurance after the fire. I mean, anyway, for everyone else,
no, you can't. And that,
I mean, like, so it's people are like, well, I may not need this for 10 years. Like, okay, but you can't think of it that way. Like, you just can't. I mean, the fact is that it's going to pay when, we don't know. I mean, hopefully it is 10 years from now, but just look at the benefit that you will get when that time comes.
Yeah.
And then it renews, right? Like, you can use it every 60 days or something.
Yeah, that's what I was just going to say. So for these people who don't have plans already, this is how I sell it. Did your agent? So I hope your agent went over the way your plan works with you. That's the most important thing that I want to get done today, is make sure you understand how your current plan works, right? So then you go back to that summary of benefits again. Hopefully your agent told you, and I'm going to tell you because I'm helping you change to that plan that accepts dedicated, right? Since your plan no longer does. I'm going to make sure that they understand they have a $0 copay to see their PCP, right? That's an easy one. I'm going to make sure they understand it might be a $25 copay to see the specialist. But these are some things that you can afford, right? And they'll say yes. What my job is today is to present some of the bigger exposures that most people can't afford, like the $340 copay in the hospital, days 1 through 5, like that skilled nursing copay, outpatient surgery, chemotherapy, right? Costing 20%. You break that stuff down and then you let them know. For example, did your agent tell you that $340 copay you had with Humana, did they tell you that restored every 60 days to where you're not just subject to that $1,700 bill or that $2,000 bill one time a year if you end up in the hospital? You're subject to that possibly 3, 4, even 4 times in 1 year. because the way this works is your copays in the hospital restore every 60 days. So you spend 5 days in the hospital, you pay your $2,000 bill. 61 days later, you end up back in there. You're subject to another $2,000, and again and again. And the reason that this $25 program is so important for that person, and you can tell them this, is because the benefits restore every 60 days to coincide with that, right? So that they're not subject to that again. And so there's a lot of value in just the base plan here. And same thing with that ER benefit that's built in, paying $150, so that they're not having to pay those copays. So tons of value built into that. But also, one more thing that I know you mentioned your agent didn't tell you about the fact that your hospital copays restore every 60 days, but did they at least tell you about that 20% coinsurance on chemo, and that the diagnosis of cancer is one of the most common ways people hit their max out of pockets, that scary number that we went over earlier? They didn't tell you that either. Well, that's a no-no. Compliantly, agents need to be going over all of this stuff and presenting it this way. And they should be presenting a way for you to cover it too. If your agent could have told you 5 years ago, you could have taken out a policy for $15 a month that would pay you $5,000 on the diagnosis of cancer, would you have? Yes. So why wouldn't you now, right? And the important thing about this is, and if they're guaranteed issue, this is even easier. But right now you can qualify for this plan. That doesn't mean you're going to be able to 2 to 3 years from now, right? Or even next year, maybe not even tomorrow. And then you go over some experiences that you've had with your own clients, right? And then I bring up Cynthia down in Texas. Cynthia, okay, Mrs. Jones ended up 18 days into her United Healthcare PPO. Mrs. Jones ended up in the hospital for 2 days. She also took a trip to the ER. This is a lady who I had a hard time positioning the hospital plan to, because she didn't know if she should be paying that. She's low income subsidy. She's not cost share protected though. So that's the person who actually needs this the most, because she's not going to be able to afford these copays when the time comes. So instead, she's paying like $28 a month right now for this indemnity plan. And 18 days into her PPO, she calls me, Brandon, something serious happened. I ended up in the ER, and then I spent 2 days in the hospital. And I was diagnosed with AFib. She has AFib now. Things changed in 18 days. Thankfully, she took me up on that indemnity plan. I got her a check for $750. She ended up with money in her pocket. I texted Drew that night. I texted him the example. I think you'll remember it, right, buddy?
Which one was that?
A big long text of that lady in Texas who 18 days into her plan, she got diagnosed with AFib and spent 2 nights in the hospital and went to the ER. And I got her a $750 check 18 days into her plan.
I feel like there's a bunch of those stories.
Yeah, I have some more too, and I feel like they all happen in Texas. But I just had my first cancer claim out of however many policies. I just finally had a lady call me like a month into her plan. She was perfectly healthy, went in to remove her thyroid or something like that, and they found a huge lump, a cancer lump on her thyroid, diagnosed her with cancer, and then they removed it. But the pathology report is going to show she was diagnosed with cancer, and she's going to end up with I don't remember how much, but $5,000 or $8,000 in cancer benefit, a check written to her.
I can't even. I mean, what part of the reason that I guess I would self admit that I'm bad at selling these plans is I'm really good at it. I just sell products that have it incorporated in there.
Yeah.
And I do it all the time with like the term and the IULs that I sell. I hit on that like crazy, and that's really the number one. I'm like, dude, think about people that have had a lot of this just happened yesterday. I was in the field, and the lady, her husband has cancer currently. Colon cancer, like he helped, good prognosis or whatever. Like they think that he can beat it because it's a beatable form. But I'm like, well, unfortunately, we can't get you this coverage. And luckily, in their case, he wasn't working. They didn't need it. They needed her to be covered anyway. And I was like, had I met you guys just 3 months ago, and we got him this plan, your house would be paid off. I mean, can you understand that? Like how the benefit, this is not just a death benefit. This covers you a diagnosis for like you just got. if we had, and I told the wife, like, so if this happens to you, your house is paid off. You don't have to die. And
Some,
it just adds the value. I mean, that's, people see that more, and it really is like, people are selfish, you know, I mean, they are more mortified, I think, that of getting sick and living with it than they are dying.
Mhm.
And you kind of should be, because like you got to sit there and deal with all this stuff, and your family, especially if you don't have the funds to take care of your family, you've got to watch them suffer. And even if it's just you, I mean, people that are don't have any family at all, it's a phenomenal thing, because it's, hey, when that time comes, there's nothing worse than being broke and old.
Yeah.
I mean, and that you will eat through every dollar that you have if you have a major health issue and you don't have the right insurance for it.
Yeah. And I had a client I'm thinking of right now. She had stage 3 kidney disease, I think it was, and just focused on the fact that she could not get the policy, right? But her husband, it made her husband want it even more, right? The fact that she couldn't be covered for all that stuff.
Hey,
And,
so one of the biggest holes in Med Sup and the original Medicare is long-term care. It doesn't cover any of that. Like, is there any benefit here for that?
no, it's the skilled nursing is where I kind of position, just sell it a different way, but nothing for long-term care.
Okay.
Long-term care is so expensive for seniors. That your life insurance would help with that though, right? Certain kinds.
Yeah, that's what the IUL does.
Yeah.
But I get asked that a lot. And
just
people,
wrote my
long-term
first
care
one,
insurance is almost, it doesn't even make sense. I mean, most companies don't even offer it anymore. Mutual of Omaha has a plan, but it's not very good, and it is so expensive, and it's almost impossible to qualify for. So
yeah, we're going to come out with like a short-term, like a home health care plan that I think would be a good alternative, right? Have somebody come to the house and take care of you, a nurse, somebody actually in your home. It's becoming very popular. So we're going to build one of those, maybe even a guaranteed issue home health care plan. That should be super easy to sell a ton of it.
yeah, but people get locked up there. I mean, they will burn through every penny that they've got.
Yeah.
And very quickly.
It's unfortunate. Yeah. And even the med subs don't cover that, everybody. So
yeah.
So we'll finish up. Let's finish the slides. I know slides aren't the best part, but the slides are important too, because you got to understand that our product does offer a 1-year guaranteed issue period, ages 64.5 to 65.5. So aging in to Medicare, perfect opportunity. You can get on this plan now with COPD. If you wait till you're over 65.5, that COPD is going to knock you out, right? You will not be able to pick up coverage like this anymore. I'm sold, right? Nobody's going to turn that down. And it doesn't cost you much at 65 either.
Hey, even if you do a Med Sup on somebody, can't you do this too?
You can do it too, yeah, but yeah, it doesn't happen too often because what? They're covered 100% in the hospital, right? They would just make.
But for next, I mean, if they're paying $50 a month, I mean, and they're pretty sick, it could be just a smart thing to add on. Like how do you guys pay out
the other stuff like long-term care?
Yeah, like how does that work on your end? Like, how do you, if you've got somebody that qualifies on the guaranteed side and they're going to the hospital like every 6 months, you keep paying?
Yeah, we have to keep paying. So thankfully we have some stuff in force, for those folks who don't get on guaranteed issue. We have a 2-year contestability period to where we look back at their medical records within the first 2 years to see if they white sheeted the app, because there's no underwriting at the time of issuance, right? We don't actually have a team look at their medical records and make sure they qualified for this or look at their meds. The agent is doing the field underwriting. And when you're writing these policies and a year in, this person files a claim and they're not guaranteed issue, a year in, we pull medical records and it shows, they had stage 3 kidney disease, neuropathy, which is a complication of diabetes that we don't accept on this plan. They take over 50 units of insulin, and all this stuff starts popping up. We can decline the claim, don't pay the benefit, and rescind the policy back to the effective date and refund their money. But
you can't do that if it's issued during the guarantee.
not if it's guaranteed issue. So in that case, we're screwed, and that's why we're kind of keeping this window a little shorter than some of the other companies are doing. You're seeing some other companies out there now expanding that to age 68.
I saw that.
Yeah, and we're kind of taking a different angle at it. Nick and I had talked about it quite a bit, and we were debating it. You know, do we want to make it to where it's maybe coincides with when their Part B starts, right? Or do we want to expand it up to 70? No, I want to keep our loss ratios down so we can keep this as an issue age rated policy, right? Keep it issue age rated. Whereas and don't try not to ever really need to take a rate increase. If our claims are good and we're making lots of money in premiums, hopefully we don't need to take rate increases ever. Like that old block of business we had going for 10 years, never took a rate increase. We actually had to increase our policyholders' benefits by like 1.5 times. So they were 150%. So they were getting $350 in the hospital instead of, or let's just say $450 in the hospital instead of $300 per day. Some crazy stuff like that I thought about when we decided to keep the guaranteed issue window a little smaller. Okay.
Yeah, that's interesting. I just saw that recently. I'm like, how in the world are they making money if they're doing that?
Well, they thought, you know, some of these companies have IUL, a lot of life insurance on the books, and they're making money elsewhere. I'm kind of focused on this hospital indemnity. We are. I talked about it earlier. We do have some exciting news. We will be launching a multi-year guaranteed annuity, a MIGA, pretty soon in the next month or two. But as of right now, we just have the two products on the market. So we're being smart about that guaranteed issue window there to try to keep this as an issue age rated policy that doesn't ever need to really take any increases. But
are the commissions affected if it's issued during guarantee?
They're not. No, the only way commissions are affected is if they're over 80. So you write an 81 to 85-year-old, you'll get paid about 15% less or 20% less.
And you think if they were healthy at 81, you wouldn't care?
Yeah, they're probably going to be using that plan though over 80.
That's true. Yeah.
Right.
Oh yeah, you get to 85, your body just starts falling apart.
Yeah. So
that's what I tell. I mean, I talk to my clients all the time. I'm like, even if you make 80 is when you really start to, your body just falls apart. I mean, and even longevity, all this stuff out there's, where people are living longer. So they're trying to push that age further, and it's working. And if you got a lot of money and you take care of yourself, there's a good chance that you will make it to 85 or 90 before you fall apart. But it happens. I mean, it happens quick. I'll never forget, my grandfather was just the epitome of great health. And we had his 80th birthday party, and he was dancing. And he was still running. I mean, he was like active, like I mean, I thought he'd live to 100. Yeah. He hit 85, and I mean, it just overnight, he got cancer. He had to go through the chemo, just wiped out his brain, and he was just completely he was like a potato, like a vegetable, and within like 6 months. And it was just, I mean, and I was in this business, so I just got into it, and it was like, I always tell people, I'm like, you're more than likely, even if you make it past 80, 85, like it won't be much longer. And very rare do people live to 90. And if you're sitting with a couple, there's like less than a 1% chance that both of them are going to live to 90. And that's where
you don't recover very well either at that age. So I just had an experience myself with a family member's friend, and she's gone now, but it happened so quickly.
This conversation is kind of, it seems, I know people that don't, I talk about it all the time, where I'm like, I have these conversations with my clients every time, because you have to.
Yeah.
It would be weird if you went, if you were out with your mom's friend or something, or your whatever, somebody that you met somebody at a gas station, you started just talking to them about how they're going to get sick and die when they're 90 years old. That would be awkward. Yeah. But that's why you're in our business. That's what we're doing. Right. When I get new agents, a lot of times they're like, "You actually said that?" Yeah. What? I mean, what? Why would I not? We're in the business of helping people. We got to make them understand that this is the truth. Anyway, so I got on that tangent. But.
And the 6 month pre-X you see on the screen too. This actually, I use it as a selling feature. You know how? if somebody's getting on this plan, let's say they have COPD, right? They're getting on guaranteed issue. Guess what? The 6-month pre-X still applies. So they're also all upset about how they're not going to be covered for the first 6 months in the hospital if they're hospitalized due to that COPD. Well,
Oh, is
doesn't that make you want it even more for 6 months from now when we can start covering hospitalizations due to your pre-existing condition? Doesn't that make you want it even more, thinking about how
Yeah,
you're not going to be covered for it the first 6 months because you want to be covered so bad, right? 6 months into this thing, you could be hospitalized 3 times this year or 10 times in the next 5 years, and we'll pay. Every 60 days, we'll pay your benefit, and it restores. So I just wanted to throw that out there. A lot of cool things and ways you can get around selling this plan a little better. We do have a household discount offered in pretty much every state other than one, Kentucky, but it's a 7% discount. All you have to do is live with somebody over 18 to qualify for it. There's a couple states like Oklahoma, Illinois, and Ohio where you have to have 2 people apply to qualify for the discount. But other than that, just living with somebody over 18 will qualify you. We have a dual app. Everybody, new agents, I don't know. I guess they haven't seen any of my trainings online, but they go and write a husband on one app and the wife on another. Don't do that. If they're paying out of the same banking info, whether it's a daughter, a relative, a husband, a wife, if they're paying out of the same banking info, put them on the same application because you save the second person their policy fee, right? There's a $25 policy fee in most states. There's Mississippi, it's like $6 or $7, but there's a $25 app fee. I'm going to need, this charger is not working, yes? I might need to plug this into the wall. But you can waive that app fee for the second policy holder if you do them on the same app. There we go. So write 2 people on the same app. If you have to do a husband and wife and then the kids on another one, put 2 people on each. And then this is where it gets good. The riders, we've covered all the riders. So I'm just going to show you the cancer benefit goes up to $20,000 with us. If they want more than that, you got to go write a standalone with someone else up to $100,000 or $75,000 with some carriers. Our cancer benefit, this is important. So hopefully everybody can stick on just a little longer. I know it's getting late, but our cancer benefit pays 25% on in situ, 5% on skin cancer, and 100% on those internal cancers like Drew mentioned, colon cancer, breast cancer, right? Pancreatic, all these different cancers internal. But we pay 25% on non-invasive stage 0 cancer in situ, right? Some people might say, oh, why? Just let them know right at that point. Just say, well, some companies don't cover anything for cancer in situ, right? It's a very common cancer and it could put insurance companies out of business. So for example, Mutual of Omaha does not cover non-invasive cancer in situ.
what does that mean, in situ?
It's non-invasive stage 0 cancer is what it is. That's in situ. It's stage 0.
So cancer, so skin cancers?
Well, there's certain types of skin cancers like your carcinomas, right? And your basal cells, and what do they call the other one?
Melanoma is the bad one.
Those are the ones where we pay 5% on.
Okay.
It's some of the other ones that are not quite like that we pay 25% on. Like those squamous and basal cells are so common, even more common than in situ. We only pay 5% on those skin cancers.
5% of what?
5% of the lump sum. So if you have a $10,000 policy, we'll pay
Okay, gotcha.
5%.
That's still, yeah. I mean, that'll probably pay for the procedure. They just have to have a
removal. Yeah.
Those things that's not a major surgery. Like my dad's a dermatologist. You're getting like a $500 bill probably.
And that's what that would cover, right? If you had a $10,000 policy.
Yeah.
$500. So it'll pay for the removal, most likely, and it hasn't spread anywhere, so nothing else really should come up. And the nice thing about that cancer benefit is it'll pay again over time. So 1 year cancer-free, it'll pay a 10% benefit. 2 years cancer-free, 25%. And it builds back up after 5 years of remission. You can collect another 100% benefit for that diagnosis. Pretty cool.
Yeah, that's awesome.
I know some people on this call are writing standalone cancer plans. Guess what? most companies charge you for that reoccurrence rider, right? Whether it be $5, $8, $9 a month, more premium, ours is built in. Ours is built in, and you can tell them that. No additional premium for a feature like that. Next up, the hospital confinement. Okay, this is one that we're seeing more than ever being sold right now. But guess what? It's in the under 65 market. Because of what? The deductibles, right? You got a $5,000 deductible before your plan is going to pay anything. And you get diagnosed with COVID, right? COVID happens and you spend 3 days in the hospital, right? That's a big bill. And you're under 65 health coverage, whether it's employer, group health plan, ACA, you're paying a big deductible and you're paying all the costs all the way up to that deductible. In this situation, you could have a $600 a day base plan, right? Our base plan goes up to $600 a day. And then you can also have up to $2,500 in lump sum hospital confinement protection, which pays on one 24-hour period in the hospital. One 24-hour period in the hospital, you get a check for $2,500 plus, guess what? Your $600 base benefit. $3,100, right? And for somebody under 50, everybody ages 18 to 50 pays the same rate. So that 49-year-old who just snuck in there right before the increases start happening in our rates, that person is paying a pretty dirt cheap rate for $2,500 lump sum for 1 day in the hospital. So when I'm 49, I'm picking up this rider here. I'm adding a $2,500 lump sum benefit, which pays twice a year to my coverage because it's so inexpensive under 50. If you're meeting with your Medicare clients over 65, you're never going to be selling this hospital confinement rider. It's $100, you know, $150 a month to add something like that for somebody over 65. It's expensive because those are the people who end up in the hospital more. That 80-year-old, I don't even want to know what they're going to quote me on a $2,500 lump sum hospital benefit because that could be $5,000 a year for that person who's over 80. Huge benefit in the under 65 space and commonly packaged with the $600 daily benefit for that individual under 65. Lump sum outpatient surgery, right? Instead of paying, this is one that does get sold with Medicare Advantage. It's that person with the $300 copay for that outpatient surgery. Instead of you paying that, Mr. or Mrs. Jones, pay, you know, $16, $18 a month and you don't have to worry about it. Just like you wouldn't have to worry about it on a Medicare supplement, right? That's what I'm trying to do here. I'm trying to help you customize your insurance to get you a bit closer to those other benefits we talked about earlier, but for a fraction of the price. And it's so easy. So packaging all of this, skilled nursing, about $13 a month for a 65-year-old for the $150 benefit, which pays you $150 a day, days 21 through 100, and about $16, $17 a month for the $200 per day benefit, days 21 through 100. So tonight, right, the lady I wrote, I had her quoted at $52 without skilled nursing. I quoted her for the 150. It was another, you know, I think it came out to $64. So $12 more for $150 a day. She talked herself and I helped her, but we talked her into picking up the skilled nursing benefit. And I said, what's another $4 a day to make sure that you're fully protected in skilled nursing, right? And she ended up doing the $68 plan instead of $64 with 200 skilled nursing. Okay, because she realized, she said, so if I don't add this now, later on, you said I have to answer medical questions to get something like this. I said, yeah, when you're thinking about adding this, it's probably going to be because you're not too healthy and you're worried about what it's going to cost if you do end up in here, right? So, or you had an accident and they're putting you in the skilled nursing facility. You're not going to qualify to add this benefit at that time. So get it now while you're healthy.
What is the deal with original Medicare? Is skilled nursing is covered through 100 days or something?
So skilled nursing, original Medicare covers you days 1 through 20 on original Medicare, following a 3-day hospital stay and all these requirements, right?
But then, after day 20, it doesn't cover anything? No,
it's the same as, almost exactly the same as a Medicare Advantage plan. It's a copay. It's $194.50 copay, days 21 through 100 on original Medicare. With most Medicare Advantage plans, it's $188. It's a little more on original Medicare. But the thing with original Medicare is these insurance companies, these Medicare Advantage plans are getting in the way, and they're declining payments for skilled nursing. They're saying, no, we're not going to cover skilled nursing days 1 through 20. Even though original Medicare does, the insurance company, whether it's Blue Cross or United or Humana, they're saying no. The most recent one that I talked to the guy tonight, he was on an Aetna plan. They said, no, we're not covering you. We're not paying you any benefits days 1 through 20. You're on your own. So the skilled nursing facility recommended he dropped it. He went back to original Medicare, and original Medicare approved it, but he still had a pretty big copay after day 20. And he ended up with a $4,500 bill for days 21 through however many he was in there. Nasty stuff. Skilled nursing.
Yeah, I've heard that those stories that come up when people get like hip replacements and they have to go to rehab.
Yeah, it's not cheap. Yeah, the rehab's happening in the skilled nursing facility. And you forget that's a $188 copay, days 21 through 100. Hopefully for the hip, they're not in there for more than 20 days. But that ambulance benefit, you throw it on all of them. It costs $2.40 a month without the discount, $2 with the discount. It pays you $200 3 times a year per trip in the ambulance, air or ground. Covers most of your copay, Mr. and Mrs. Jones. And it's not contingent on hospital admission, just like that emergency room benefit. If you go to the ER, you take a trip in the ambulance and they send you home, here's $350 from Heartland National, $150 for the ER visit and $200 for the ambulance trip. How about the wellness benefit? Costs about $2 a month, pays $25 per health screening test listed on the right-hand side of the screen. So if I have a Medicare Advantage plan and I have no copay on immunizations or a blood sugar test or a vision or hearing exam, this plan will still pay me $25 for each one of those tests, 4 times per year. So if you're sitting with Bob and Bob's got a colonoscopy he needs to get done, he's got a annual physical he does every year, he does a physical exam every year, he goes and gets his flu shot every year, there's $100 in your pocket, Bob. You just claimed 4 health screening tests and you only paid about $25 for that this year. So you made $75. That'll pay for two months of your premiums, right? People think of it that way. I'll tell you, clients add it because they say all of that to themselves and they're like, yep, I'm picking it up. So there's a rider. Dental, vision, hearing. I like this benefit because there's no coordination of benefits. You could have a $0 bill for that dental cleaning on your Medicare Advantage plan, and we'll pay $75 for that dental cleaning. With all the other benefits, so with these base benefits here, $75 for dental cleanings, $50 for vision and hearing exams, we waive that $100 deductible after 3 months. That way, we don't have Mrs. Jones coming to us saying, hey, why didn't they pay for my dental cleaning? I've had this policy for 3 months. What's going on? Well, 3 months in, we will cover it. Now, how the other stuff works is we cover basic services after 6 months, including a $200 a year prescription eyewear or hearing aid benefit. Okay, we also pay for fillings, root canals, which is a big procedure, and we pay off of actual charges. We'll go over that schedule in just a minute. After 12 months, we start covering those major services like bridges, crowns, dentures, and extractions. And how we do that is we pay off of actual charges, right? So you end up needing a filling, right? 6 months in, we're on month 7, basic services are now covered. I go get a filling done, right? This insurance is going to pay 60% of whatever that dentist charged for that filling, up to your $1,000 or $1,500 limit after satisfying the $100 deductible. Year 2 comes around, right? After 12 months, we start covering major services. We'll pay 70% of actual charges year 2 and 80% of actual charges year 3 and beyond. Okay, this is in addition to their Medicare Advantage benefits, helping them with that 50% coinsurance for their comprehensive stuff, right? The dental cleanings are usually covered at no cost, right? They are in network, 0 copay, 2 times a year for cleaning. Same with your exams. But it's the other stuff where this is going to come help and fill in that extra 50%. that the plan's not covering for those comprehensive services, up to $1,000 or $1,500 a year. So that's the plan. We talked a ton, and it was really fun, actually. Probably one of my favorite trainings in a while. And I think it was important that we did talk through some of that. Drew, you want a quick demo of the e-app and agent portal, or maybe save that for another time? Do it tonight?
Well, let's see if anybody's got any questions, because
Okay.
I know we're running over. So
Yeah. Any questions or comments? And or good nights if you have to go put the kids to bed.
yeah, no, we lost Ashley and just they always have to run for kids.
For the kids, right? Yeah. Who did we lose? Ashley
And Justin.
Oh, and Justin too. Okay, that's all right.
But I think, I mean, the app is as easy as it gets. It's great. I don't even think you have to sign, right?
You got to sign. You got to send it to them to sign if you're on the phone with them, or do it in person. But look how easy this thing is. All we're doing is we're working through that summary of benefits, right? Well, what is it? August now? August. Want to keep this person at 65 so I don't have to answer health questions. Because this e-app is just plug and play, right? So I got a 5-day copay, right? At, let's just say $295. I'm going to cover
another thing to add too, you don't have, just because that's the gap in their coverage doesn't mean that's all you got to do for their, like, I usually do the max. I mean, part of it gives you a bigger commission, sure, but it gives them more benefit. I usually do at least 10 days, but sometimes, I mean, I go up all the way to 30 days because let's face it, that's not their gap, but if they stay in the hospital for 30 days, they're going to hit their max out of pocket of their plan.
Yep. And that's a very good point, because guess what? Yeah, so that also, it covers other stuff too, right? Because it's just cash and you can use it to pay off whatever you need to if something else wasn't covered. But also I upsell this due to inflation sometimes, right? Just because, so Medicare supplements are standardized, right? Medicare Advantage plans are not. They're run by these private insurance companies, and the benefits can change every year. So just because it's a $295 copay this year doesn't mean it won't be $400 next year. And doesn't mean that 5-day benefit won't change from 5 to 7 next year, right? So in that case, I might position a little bit higher to cover them in case their benefits change.
I like to say that, hey, this is going to be a little bit more, but wouldn't it be nice to have a little bit extra cash in your pocket after coming home from the hospital?
Another way to do it, to pay for some of the other stuff, yeah, or to put in the bank.
Yeah,
just like
I mean, and even if you do if you stay in the hospital for 10 days, I usually go up to the $500 or even $600. I'm like, who wouldn't want that? I mean, if you've got other bills, if there's other things they're charging you for, this is going to give you a little extra. And it's not that much more expensive. Look, I mean,
changing the benefit days is not very expensive to do that. Look at that. Changing from 5 to 31 was like $12.
Yeah, I think that's why I do that all the time, because, and even if you change the amount, go from 300 to 500.
Yeah, it did a little more here. Let me just do that though. 300 to 500.
Goes from 23 to 39. That's $15.
It was a bit of a jump, but usually it's not. So I don't know.
But that's still a very just such a reasonable price. $39. That's the reason I like that is because that it starts to make a lot of sense to be writing these policies, because they're getting more benefit. I mean, it's not like you're just jacking up the price so you can get paid more. They are getting more benefit.
Exactly.
But what if they go to the hospital for 3 days? Wouldn't it be nice to get $1,800 instead of just $900? If
you mess around with it like that, and they end up actually with more money. So
I did, because like a lot of times you're in the hospital you're not necessarily in the hospital for 7 days. They try to get you out of there as soon as they can. So
yeah,
and you want to get out. I mean, I don't know many people. I mean, you got to have something really serious to be in there longer than 7 days. So oftentimes it's you're in there for 2 or 3 days, and that way that your cost may only be whatever $700, but this plan is going to pay you double that because we set it up that way. So at least you'll have some extra cash in your pocket just to help you, maybe just put in savings, whatever. The point is that the overall value, when you factor that in, like if it's $15 more a month, I'm looking at the fact that I'm getting more value. I'm getting an extra $300 a month when I go to the hospital for only $15. And I know that will end up being more.
I like it that way. And honestly, I think a lot more people should position it that way. It does a better job.
I really don't even show them the only 300. I'm just like, here's the deal. This thing's going to pay you $500 or $600 every day. And your cost is only 300. So you're going to have money in your pocket and it's going to cover you for 30 days.
Are you still able to get a lot of the riders on there too? The cancer and
I always do cancer.
Yeah.
Always.
Yeah.
And then I'm usually like if you get diagnosed with cancer, you're hitting your max out of pocket. So we want to do at least $7,000 for that.
At least cover your max. But guess what? If you get diagnosed with cancer and you need chemo, are you done chemo typically after 1 year? Or do you usually go through 2 years of chemo? And that's how I sell it. And I sell 2 times the max out of pocket. So like here, this is a $3,400 move. I go ahead and I position 8,000. And for this 64-year-old, that brings her premium up to 56 now. Oh, excuse me. Let me bring that back. So look at that, $39 a month, and you got an $8,000 cancer benefit coming your way. But let's add that back at 5. So right there, $46. Now, here's the other one, skilled nursing, right? Only costs about $12 for a $150 option to cover most of their 188, or you can cover all of their 188 for about $16 with the discount, bringing them to a total of $61. Who can't afford that? That's now the price of a tank of gas for everybody.
Yeah.
These are cheap. I mean,
I guess I'm sure you're going to talk about the commissions on these things.
Yeah. Let's talk about that. So let's look at this, $64 a month. And let's just say average street level commission, 50%, right? We're looking at a 50% commission paid on a 9-month advance during AEP, right? When you're needing to buy some more leads and you're needing to pay for some more marketing, you now have money to fuel that and to pay for that second mail drop first week in November, right? Or first week into October or second week. We can do that. And what would happen here is we take that commission, of course, we multiply it by our annual premium. So on this plan, it would be $64.17 times 12, $770. So the first year, this is including the 3 months that you're not paid on in advance because it's a 9-month advance. The first year, you're earning $385 on this one sale. So tonight I made $900 on one client. If it's a husband and wife, it would have probably been closer to $1,800 after a work day. You go and do something like that, and you end up making a big difference in your bottom line that year. And you do that consistently, and this 385 ends up annually for one sale ends up becoming, let's just say you did 20 of them, $8,000, right? That's 20 sales. Who can't do 20 sales this year, right? I challenge you to write 20 of these this year and make an extra $10,000. Okay.
Yeah. And then the renewals are what, 10, 15% each year, something like that?
Yeah. So that same annual premium, what was it? Do you remember? 64 times 12?
700 something.
So 770. And you take that by, I couldn't tell you what the street level renewal is, 2 through 10, but let's just say,
it's like 12 or 15%, I think.
Yeah, street level would probably be somewhere like here, but let's just look at that. That's annual policy times 20. Yeah. And if you were a little bit higher, let's just multiply that by maybe 1.5. It makes a big difference. So $2,000 probably, $1,500 to $2,000 in renewals off of those 20 sales every year for the next 10 years. You made $8,000 the first year, then you made another $1,500 to $2,000 the second year, and the year after, and the year after, and the year after. And it just starts adding up because that year you do 20, the next year you do 40 or 50, then you do another 40 or 50 the following year, and you start building the pipeline just like you're doing with your Medicare and your life business. Man, it's going to get good, right, for all of us. So very easy EAP. You can see it's just plug and play and adding benefits, adding some dental, adding some vision, right?
Well, so if you add all that stuff, you're looking at I mean, it starts to get a little bit costly, but again, it's adding value. Like, here's the thing with something I tell people in life. I mean, I get really big premiums when I make sales because value. I explain the value that they're getting, and when value exceeds price, people buy. It's not about $99 a month. It's what are they getting for that? When they see that they're getting a lot more than what the price doesn't matter as long as they can afford it. And $99 a month if you present it right, it's going to be worth it.
It's less than the med sup,
and it's
right?
still less than that they're paying. Yeah.
And guess what? The Medicare Advantage plan had dental, vision, hearing, and this plan for $97 had dental, vision, and hearing.
But think about $97 a month. That's closer to like $1,200 a year. If it's 50% commission, you're getting paid $600 right there.
Yeah.
Up front, and then the renewal. I mean, it really amplifies that number. That
it does. Yeah.
So I just think is that at the end of the.
Yeah, that was the end of the commission demonstration. But I was just going to walk through the EAP real quick. There are 2 questions related to the cancer rider. We look back 5 years instead of 2 on the cancer rider. Everything else we just look back 2 years for. And it's such an easy EAP, I'll tell you. You can fly through this in 5 minutes with your client at the end of an enrollment and make an extra several $100s. And the husband and wives are the best feeling too, because it didn't take you very long. It didn't take you any longer because all you did was fill in the gaps for them too. And they were the same gaps because you probably wrote them the same MAPD. Oh, sorry. So it doesn't take you long, especially the fact that this has a, I put the Blue Springs zip code in. Especially because this has a dual application available. I'm getting tired too now. Go put myself to bed. Couldn't imagine being on the East Coast with you guys though.
I'm used to it.
This is the late night crowd, huh?
Yeah.
I like it.
I think everybody's still out on here is in Central Time Zone. So.
Oh yeah, Texas.
Brad's in Alabama. And Reid's in Texas. So yeah.
Jason, you're in Texas, right?
Yeah, he is.
Yeah, I'm just north of Dallas.
Oh yeah, nice.
Hey, question about processing a claim. Like, do they have to file their own claims? And if so, is that very tedious? Because a lot of older people don't feel like doing that.
Yeah, no, it's so easy. So what's going to happen is all they need to do is have the hospital send in an itemized bill for them. So on the back of their policy or on their ID card, there's a fax number and an email address for our claims department, customer service. And if they hand that to the billing department, or if they call the billing department the next day, all they have to do when they're back home, let's just say 2 days later, they're out of the hospital. Hey, billing department, would you please send my itemized bill, or a UB04 is what sometimes they refer to them as, but an itemized bill will do. If you can please send that to this fax number here, or email it to heartland@acmanre.com. I'd like my money, please. So please send this bill to the insurance company so they can pay me my money. And that's how easy it is. There's no actual claim form. So you'll experience it just like I have. The policy holder will call you. You'll literally call the billing department with them and ask them to send the bill in. And it takes 2 minutes. You call the hospital, hit option 2 or whatever it is for the billing department, and have them send that bill in. So you'll see right here on the, I hope that answers your question, Jason.
Yes, but what about like the dental or the like the flu shots? They get $25.
Yeah, same thing. We just need evidence. We need the date of service, right, which is on the itemized bill. It's on the bill. We need what they did, right, the cleaning, or the pathology report of that cancer diagnosis, right? We just need evidence of whatever they had done, because this is a cash benefit. If you got diagnosed with cancer, we pay this. If you spent a day in the hospital, we pay this. If you had a dental cleaning, we pay $75. And all we need is to be shown what happened there. With the dental, if it's like a filling or something, it needs to be a little more in depth. It has to have the cost of the filling and all of that on there. That way we can say, okay, we're going to pay 60% of that year two, or sorry, year one, or 70% year two. And we're going to pay that no matter what your Humana plan paid, or no matter what your Emeritus or nationwide dental plan paid. We're paying our benefit because it's a cash indemnity plan. Indemnification. Does that answer that question, Jason? Tell you when you have a claim.
Yes, it does. And I'm sorry there's a delay, but it takes me a second to unmute my phone.
Oh, it's okay.
Sometimes
Just
my
call me
kids are
when you have a
talking in the
claim.
background.
Yeah, no problem. I'll help with those claims whenever you have your first one come up. Agents
Okay,
go a year
thanks.
or two, sometimes without getting their first claim. Like I've been selling this one for 3 or 4 years, and I just had my first cancer claim, where I'm hoping I'm able to help this person with an $8,000 benefit. Pretty exciting.
Yeah, I mean, probably the biggest benefit of all is that we got the guy that runs all these operations on the call right now, and basically direct contact for him. I've had a couple issues with clients that had one lost their policy or something, and I didn't realize Brandon had that kind of power, but I was like, hey, this so and so lost her policy, and he just looks it up, and like within a day it's back at her house. I'm like, holy cow, that was
Well,
awesome. So
yeah,
anyway, he's the man. I mean, so as far as like having access to a company, and getting things done with most carriers that we represent, that's very difficult, because even our reps and there's the rep, you don't even know who the owner of the company is. We know the owner. I mean, Brandon's the second in line, next to Chris, right? I mean, when it comes to these policies. So it's pretty cool, because if there is a claim, if there's an issue, if there's a complaint, there's anything, we can go right to the source.
Yeah, that's exactly right. And that's what I tell people who write other companies is, you don't have access to that with those huge companies that have all those other products on the line. I'm your indemnity guy. You're writing an indemnity plan, call me if you need some help, and we'll make sure they can get that signed nice and quickly and processed the next day.
And I would even go over that in the home. Like, hey, we're so close with this company that if you have any issues at all, like we can get you on the phone with the people that will make it right away. And like, that's a comforting position to be in, because like, I just know that I've never had an issue with any claims not being paid or anything like that. But if there was anything, we'd at least get the answer within, an hour. Like
that helps you sell more. And
sure.
And you know how I know? Because when I took my position as VP of sales, I started selling more, because I gave my clients this card right here with the name of the company on it and my name in the back. And I said, you're going to get paid your claims as long as you deserve the claim. As long as you're telling me the truth here, you don't have any of these conditions, or you don't fall subject to that pre-X or contestability period, you're getting paid your claim, and I'll make sure it's paid quickly. And you guys have access to me to get claims paid quickly. Shouldn't be waiting for them to get their money. Within that contestability period, right, when we can look back at medical records for 2 years, we typically only enforce it for 1, right? I'll just say during that period, it can take a little bit longer to pay the claims, because it depends on how quickly that provider sends us the medical records. Sometimes we have to wait on those medical records for a little while.
Yeah, I mean, I don't think people usually understand all that kind of stuff. So that's awesome, man. I appreciate the time and even going over as long as we did. I could stay on here all night and talk about this.
Yeah, I'm all for it.
It just makes you as an agent, when you have this an extra tool in your belt, makes you more valuable, and it makes you better than the competition. If anybody's coming behind you, they're not going to replace the policy that they have. First of all, there's not much that can rival this. So if even that's just not even happening. Most agents aren't even thinking about this. Even if they replace somehow somebody convinces them to switch their Medicare Advantage plan, they are not taking this away. I guarantee you that's just, they're not going to be able to show them anything better. The GTL is the biggest competitor and it's very, very closely priced. So if they come in 2 years later, they're not going to beat the price. It's just, they're not going to, and they're probably not going to try. So even if you happen to lose a client, you're not going to lose this policy. I just think it just makes you more valuable and less likely they're even going to talk to another agent. And just
now you know how to sell it too, right? I just replaced the GTL policy. The guy canceled because it didn't pay a claim. And sometimes these other companies have issues paying claims, right? And people get upset about that. But I sold him a policy that was like $18 more a month because I positioned it right, educated them on how it works. You know, I sold him a plan for more premium after he had just canceled the other one because it didn't pay a claim, because we can make sure things go right. So that's it for me. Really good points tonight, Drew, and I missed you, man. This was great. Thanks for having me.
Yeah, no, we need to do this more often. It was good to see you in. Are you going to be out there in California by any chance? They're doing another one of those IUL things.
No, I won't be at the IUL event,
okay,
unfortunately. But Neil was in town yesterday. I went and shot some pool with him, which was really fun.
Yeah.
And he'll be down next Tuesday. I'm going to get some tickets to the suite. We're going to go watch a Royals game with Dino and Gary. They're coming too. So pretty excited about that.
Cool.
Looking forward to seeing
I'll
you guys
try
the
to
next
get up
time
there.
we're all together.
Yeah, I'll try to get up there. Or if you haven't coming to Atlanta again.
Yeah, try to come on Tuesday. We'll go to the baseball game. Seriously.
To Kansas City.
Yeah, if any of you guys want to come to Kansas City next week, I'll take you to the suite. We'll go watch a ball game. Just text me. It'd be fun. But I know that's kind of crazy to plan last minute like that. So if you want to come another time, just let me know if you're in town and we'll go see a ball game.
Yeah, well,
right.
I appreciate the help, man, and always, as always, thank you for your time, and look forward to having more agents working with you on these plans coming up.
All right. Well, thank you so much, Drew.
Thanks, man.
Thanks, everybody. Nice to
Thank
see
you.
You're welcome.